Last quarter in Q2, the margins were 14.1%, but it's fallen to about 13.9%.
On the downside, important levels for the Nifty are the 20-day moving average and the 40-day exponential moving average.
So let's take a look at the first tick on the index. 21,800 is what we're seeing on the Nifty.
See, for the public markets, I think the earnings momentum and near-term valuations should play a much more important role.
Their merit order, they find that Mudra tariffs continues to be very, very competitive and low compared to alternates which they buy at a higher price.
The week has started off on a weak footing because we are looking at a broad decline, not just on the Nifty or on the sensex, but the mid-cap index as well.
Well, this is a very important announcement that has come from the JSW Group. They are looking to begin construction in Cuttack, Odisha by the end of the year.
So as per our sources, the total issue size is expected to be anywhere between 1,400 to 1,600 crore rupees.
In the last 2 days, the PSU index has fallen more than 6%.
The market will watch very closely for pulses, cereals, and to a lesser extent for vegetables as well.
It's a shade of red across major indices.
Okay, well, it's a dark shade of red across the board, and broader markets are hurting. That's essentially the one-line summary of what's going on, really. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Rima and Surbi here in the studios, and Nigel is joining in from the newsroom floor. Guys, hi, good afternoon. It's red. It's Nigel was talking about Valentine's Day in the morning. So that's the shade, right? Red is the shade.
I like the spin. Not sure if people feel the same way on the street, but yeah, for what it's worth.
I had to spin it, right? Anyway, let's just quickly take a look at what's happening. So I'll come to the Nifty, the Bank Nifty in just a bit from now, but the broader markets are seeing a significant amount of pressure. And I think it's day two in that sense, right? We were talking about why there's no follow-through on the index, and there is no follow-through. And we were talking about this last Friday when the market was going up after Thursday's 200-point sell-off, that if you get a 50-60 point higher start on the Nifty, what you do on Monday morning? I mean, does it mean that the market's going to go up? It wasn't clear, and it certainly is not clear because the market is down. So one day down, one day up, one day down. That's essentially been the story. But for the broader market, especially the PSU space, there is follow-through on the downside. So last Friday was the first session when we had a 2.5% sell-off on the PSU Bank Index, the CPSE Index, and today you got another 3.5% now coming through. Small cap index also, I mean, the last I checked was just under 3% or so lower. So these are meaningful cuts which are coming through. Stocks, by the way, and we'll talk more about that in just a bit, in that space, many are down between 10-15%, 2 days flat. IT stocks are seeing a bit of attraction on the other side. I mean, the index is up about 1%. And the Nifty, just to come to that index, is trading below the 20-day moving average, which means that the next level to, in a way, it's support, you can say, well, it gets there now if this continues, is the 40-day exponential moving average, which is 21,450. Bank Nifty, same story. I mean, last Friday, against expectation, the Bank Nifty rose 1.5%. Today, it's down 1.5%. Which once again leaves us wondering whether we will see the recent low, which stands at about 44,429, a level I've spoken about quite a bit in the recent past. Rima.
Hi, and if it wasn't for IT and pharmaceutical to some extent, the shade on the market would have been a lot deeper in terms of red. So the Nifty IT index has a gain of close to about over 1%. The Nifty Pharma index is up 0.4%. And in individual stocks, the top gainers, pull up that contribution list and you would see Dr. Reddy's, Wipro, HCL Tech. These are the, Infosys. These are the stocks that dot the gainers list. On the losing side, it's, banks, ICICI Bank and HDFC Bank are the biggest drag. So it's not just the PSU banks, but even the private sector banks, which are hurting today.
And I guess we've got the answer, right, Prashant? Remember the question that we were asking on policy day, whether this is just a one-day sort of pain and it'll go through the system. It's clearly not. So the market's dealing with two different issues. One is the fall in banks, and we have a decisive answer that the RBI disappointment that we got last week, the effect is still going through the system. This whole talk about tighter liquidity and maybe not a very charitable RBI that starts cutting rates very, very quickly. So that disappointment is still playing through the system. That's one. And then the other facet that Prashant alluded to, the fall in PSU stocks, that's kind of triggered a bit of a panic. Though if you see the PSU index from the peak is only down 6-7% after what has been a stupendous run. But the pace of fall today, the manner in which it has come in, triggered by some of the weaker numbers. And these are the weak numbers, and we'll talk more about that as we go. all of these three PSUs, after having run up as much as they did, posted numbers where either the top line was down, the EBITDA was falling, profits were falling, and the market did not like that. And then the collateral damage started spreading through the rest of the system. So HUDCO, NBCC, NHPC, I mean, it's a long list of PSU stocks which are down and out. And the thing is, we don't have too many other points to hold up the market. Coming back to the Nifty, I mean, you don't have that support from Reliance or the other big stocks today. So, Nigel, I guess, I mean, we've got these twin engines that are fired up for the bears today. The PSU correction that's finally set in. And, of course, the problem that banks are facing that clearly doesn't seem to be over, at least right now.
Well, all eyes on Reliance Industries. You know, when you are in time of need, it appears the bulls turn to Reliance Industries. And, you know, as well, we're going through the entire market setup, you know, just look at Reliance Industries from the day's low.
Nigel,
it appears, you know, Reliance Industries is trying to fight back a little bit. So I think the intraday chart of that one should come up for you on the screen. How do you position yourself in the final hour of trade? Nagraj Sethi joins us to help us out with that. Nagraj, first of all, on a closing basis today, what will make you a little bit nervous if you're a bull, both on the Nifty as well as on the Nifty Bank? And then you could give us your strategies as well.
Hi, good afternoon. Yes, Nifty has been in a downward correction along with the severe correction in the broad market indices. For me, 21,500 is going to be a good support for the market as we have seen some minor pullback rally from near 21,570 odd levels. That is the good support. If that breaks, another 200 to 300 points cut is likely for the Nifty. At the same time, Bank Nifty is also looking weak. We have seen some good amount of upside recovery in the previous session. The Bank Nifty has given up all the gains of last session. Currently placed at the support of around 44,500 odd level, which is near to the 200-day EMA. I think that is very important support for the banking sector. If that support breaks, then we could see some good cut, sharp cut in the Bank Nifty as well. So the broader markets are weakening. It is giving long calls in the broader markets is like catching the falling knife. And I would like to give two short calls on this. First one is Pyramid Enterprises, PEL. Chartically, PEL has been in a downtrend continuously, and recently we have seen minor upside bounces during uptrend in the market. It was not able to sustain the gains and slipped onto a decline. Currently placed around 850 levels. I'm expecting this support to be broken. One can look to sell around which is around at 870, and 820 is going to be the target, and 900 can be placed as a stop loss. Second one from the banking sector, IDFC Bank. IDFC Bank has been in a distribution pattern last 1 or 2 weeks, showing some range bound action and broken below the range bound action in the last 2 sessions. Currently placed at a support of 200-day EMA. Now trading around 113.80. One can look to go for a short at this point of time, and the target would be around 107, and 117 would be the next stop loss for this stock.
Thank you very much for that. NHPC's numbers. Net profit is down 30% on a year-on-year basis. Even the top line has declined by 25%. So a little bit of a top-down miss coming through. NHPC stock down 14%. So the poor earnings from PSUs continues. But Bharat Forge is on our radar, and that stock has crashed 11% after the Q3 numbers. Sonia, numbers looked okay, but you're pointing out that the commentary is disappointing.
Well, the main reason why the stock is under pressure is because the commentary from the management is very weak. And if you remember last quarter, the commentary was not too bad. The management said that things were improving. But this quarter, suddenly there's a turn of, events. The company said that they expect the growth momentum to moderate in both the domestic as well as in the export markets, not just in Q4, but in FY25 as well, which means that it could be a long drawn out, a sort of caution for the company and the industry. Now, if you look at it, the numbers, I just want to point out 2 reasons why I'm a bit concerned about the numbers. One is that tonnage growth has slowed down. The shipment tonnage is up only 7% year on year, and it's actually down 4.5% quarter on quarter, coming in at 70,459 tons. And the other one is that exports continue to be under pressure. So the exports have seen a low single-digit growth of 4% year on year, and the revenues are actually down almost 16% quarter on quarter. And, domestic markets are doing fine, but it's a slowdown in exports and low single-digit growth in the shipment tonnage, as well as weak commentary from the management, which is concerning to the street. Back to you.
Okay, all right, Sonia, thank you for flagging that off with us. In fact, let's take this forward. We have the company's management, Amit Kalyani, joining in. He's, of course, a deputy managing director. at Bharat Forge. Amit, thank you very much for joining us on this call. So let's start by what made you lower the guidance and what is making you sound far more cautious, not just in Q4, but even the next year. What has changed?
So look, basically, our commentary is derived from what we hear with our customers. Our markets our export markets are largely in Europe and US. And I think both the markets are seeing some amount of cyclical peaking. And Europe is under other pressure, right from cost increases due to both the geopolitical events in their vicinity and lots of fundamental changes in the overall European marketplace. So many sectors are seeing moderation in growth, even slowdowns. But we expect that we will continue growing as a company, except that this year we are growing 20%. I don't think that is always sustainable. We will continue to grow because we have many growth drivers of our business. Even if these main sectors do not fire as much, based on the market share gains and the new sectors such as industrial, aerospace and defense, we will grow and grow profitably. But there is cause for concern because sectorally, the agriculture sector, the construction and mining sector abroad, marine, even rail are sectors that are getting under pressure. So many end markets are slowing down, or at least seeing some slowdown for this present moment.
Amit, in November, when you had sort of spoken after the earnings for the second quarter, at that point also, from what I can see, you had said that commercial vehicle exports, the export market on the CV side, is likely to remain flattish for FY25. So you're not expecting growth or anything. You're now saying that is worsened. You'll be negative 4-5%.
No, so look, I think US will be positive because it's going to be driven by the infrastructure growth. Elections are going to happen around that time, so there will be some push for growth. Plus, there is the whole emission norm pre-buy that's going to happen. But I think Europe will be slightly down. And overall, I think it will be flattish. But because of the market share gains, I think we should be having a positive growth. But there are many other sectors where we don't see the same thing happening. Sectors that were largely driven by China or where China was a big growth driver are going to see pressure. And, that's something that will play out for all companies. I think we're just being prudent and calling it out upfront because we, believe in long-term rather than quarter-to-quarter kind of business. And I think that this is going to play out for everyone.
Hi, Mr. Kalyani. Good afternoon, and thanks so much for joining in. Nigel on this side. Could you quantify it? If you're going to see a modest or a bit of a slowdown in terms of growth for FY25, can you put a rough range to that number? That's on the revenue growth. And the positive, though, has been that margins have been improving steadily. What's the outlook out there? So I want to band on both these two parameters for FY25.
So on the growth side, I think, 10% growth is still, on the cards. If things work out better, could be, in that vicinity. I mean, it could be even higher than that if the markets perform better. Profitability on an EBITDA margin basis will be, in the ballpark plus minus 100-150 basis points. Depends on the product mix. So, I'm not concerned with profitability or the overall growth. I'm just saying that one needs to be conscious of the environment that we're operating in and, base your business model and base your plans on that and be realistic. It's not prudent for me to make unrealistic promises and then, sit and justify that. It's better to be, raise what are the concerns, what's happening in the market. Plus, in many of the geographies, the overall cost increases that the end consumers have had some amount of moratoriums or, fixed for 1 year, 2 year, 3 years, which are going to get reset. And now that cost pressures will start hitting.
Amit, can we talk about your defense business? What were the order wins in Q3? What does your order book stand at? And how much of the export pain can be alleviated by the India defense business? What's the kind of growth you foresee in Q4
So
and FY25?
currently our order book is largely export and it's about 2,000 crores. We have several new, let's say, programs which are going to be unveiled and which are going to be bid out. So that should be another addition to our overall defense business. Plus, we have many new programs where we are either in the final stage of development or in the partnering phase. So that will continue to drive our revenue going forward in the defense phase. As I had mentioned earlier, defense is now clearly on its way to becoming a strong and standalone business as a sense, which will continue to drive our growth both within India and exports. And we continue to see tremendous opportunities in export, and we will continue to take advantage of those.
Just to get that number, the defense order book is 2,000 crore. Is that correct? Okay. In Q2,
Absolutely.
it was about 3,000 crore.
Sorry?
So in Q2, if I remember correctly, was your defense order book 3,000 crore?
No. The defense order book hasn't reduced. We have started execution. The orders that we have on hand, which are yet to be executed, are about 2,000 crores.
Okay, so Amit, just to round all of this up, as you're saying, defense and aerospace are still sort of shining areas, but some of your traditional end markets in Europe are seeing a slowdown. So if I talk about consolidated revenues, FY24, can the domestic market, where you're still growing at 30% plus you talk, of course, of defense being such a huge opportunity, to what extent can the domestic market make up for this pressure that you're seeing in overseas markets? And by the time you round up the year, what will be your domestic versus export mix?
So for this year, I think our export growth will be significantly higher than domestic. Also because, our export business in defense is very large. But clearly, once the elections are behind us, I think the pedal will go on to the metal, and there will be a increase in growth rates through infrastructure and capex build-outs in India, which will drive some more additional growth in the domestic markets. So it's early to say, because I think we have this one big, inflection point yet to come in India, which is the elections. And once that is through, you will start seeing more clarity with what's happening.
All right, Mr. Kalyan, elections could play some kind of a role for FY25. So I want to talk about FY26 only on the defense vertical. Is it possible you do revenues of close to around 2,500 crores of revenues with margins in the mid-20s only in the defense vertical? Possibility?
Absolutely. It's eminently possible.
Okay, 2,500 crores with 25% margins.
I would say 2,000 plus with a 22, 23, 24, 25% margin. Let's say mid-20s margins.
Got it.
Absolutely.
Just one last question. You'd said that you'd repay another 500 crores in the second half of this year. Could you give us the latest numbers? Debt?
So this year we have already repaid 500 crores. Okay. And between this year and next year, we'll repay 1,000 crores. Okay. And, we'll after that, we'll still have over 2,500 crores of cash on our balance sheet.
This is by the end of FY25?
End of FY24.
Okay, end of FY20, this year, this financial year. Okay,
yeah.
Got it. We'll leave it there. Great to speak with you. Thank you very much for joining us, and thank you for joining us first here on CNBC-TV18 with that perspective. The stock's down, 10, 11%. We're at about 1,170. We're on 1,170 on the stock price. That's a sharp cut which has come through, and no real recovery. It's not a really sort of, positive kind of market backdrop that we have as well. So one has to keep that in mind. 135 on down in the Nifty itself, 21,645 there. Deepan Mehta is with us from Elixir Equities. Deepan, good to have you with us here. Thank you. I'm not sure if you heard some of the chat with Bharat Forge. Any thoughts?
Yeah, I think the first thought which came to my mind, and Dr. Prashant, is I like the candidness of the management, It shows very high level of corporate governance standards to come out and say that, look, not just for the next quarter, but for the entire year, it is a bit challenging. Very rare that management comes out and, gives bad news the way it has, especially in a good set of numbers. So that certainly will, remain in my memory when I look at Bharat Forge again, when the entire cycle turns for them. Because at the end of the day, it's a fabulous company and a great wealth creator. And, they have kept on being ahead of the curve and trying to introduce new products and turn to new geographies. Whenever there's stress in one, they've kind of, changed their strategies and kept on innovating themselves, which is why they have such a high valuation multiple as well. So such corrections, I think, may continue for the next few months or so. And at some point of time, when we see that, there's a turnaround in place, then it will be a good entry point in Bharat Forge as well.
Okay. All right. Deepan, stay on. We've only covered one stock. We have some more to discuss with you. Quick break. We'll be right back with more.
The sell-off in PSUs accelerate. SJVN is now locked in a lower circuit of 20%. IRFC down 11%. Mishra Dhatu posts numbers and a sharp decline in profitability is down 11%. Sudarshan now joins in to talk more about the Q3 earnings reported by some of these PSUs. Sudarshan.
That's correct. So PSU stocks are today under pressure, and in the last 2 days, the PSU index is down more than 6%. And this fall has come after recently announced earnings by most PSU companies have either been below expectations or weak. So I picked up a few companies that have announced earnings over the weekend and are today trading with huge cuts. First one is ONGC. Earnings were slightly below estimates. EBITDA was at rupees 17,136 crore against poll of rupees 17,575 crore. Crude production has fallen 3% year-on-year. Next is GMDC. EBITDA was down 64%. Margin has fallen 1,800 bips year-on-year. Midhani, EBITDA slips 45%. Margin was down 1,400 bips year-on-year. IRFC, profit booking, companies saw profit booking after subdued earnings. Both NI and profit were down 2% each year-on-year. SJVN, it was a soft quarter, but company says capacity expansion plan is on track. Revenue was down 1.6%. EBITDA has fallen 3.2%. Just a few minutes ago, NHPC has announced earnings where standalone profit has fallen 30%. Revenue was down 25%. Other expenses have risen 2 times and margin has come at 25.8% against 65% in the same quarter last year.
Oh God, that explains the kind of slam dunk on these stocks. It's been a whole series of really poor PSU earnings in the last 48 hours. Thank you very much for bringing us up to speed on the latest one there, Sudarshan, with the details. Deepan, just very quickly, what do you think? Is this just a cool off maybe in a bit of an overheated PSU market, or could this be signaling some kind of a top? And I think that is the confusion that people are reacting to and quickly selling off today.
Yeah, so my views may be biased because I don't have so many PSU stocks in my portfolio. So I would go with the latter, that the solid top has got created for the PSUs per se. And we need to realize that these PSU companies, there's always going to be a high degree of earnings volatility, has been so for the last 30 years that I've tracked them. And new investors who come to the market and buying these PSU companies, hoping that numbers will keep on coming better quarter after quarter. Look, this is a wake-up call for you.
Okay. Deepan, do stay on. We want to talk a little bit about Hero MotoCorp. Q3 numbers were in line, but the stock is down 5%. Sonia is joining in to help us understand what's causing this big fall. Sonia.
So, there was nothing wrong with the numbers as such. The numbers were largely stable, in line with expectations. They were, in fact, a good, decent set of numbers. The thing is, the stock has rallied so much. The stock is up almost 65% in the last 6 months alone, that there's some amount of profit taking that you're seeing in Hero MotoCorp. Not just that, if you go through what brokerage reports are saying, one, of course, is the fact that the stock has rallied. So there is a bit of concern as far as valuations are concerned. The other thing is UBS has put out a report where they say that the EV segment losses are on the higher side. And, just quoting from their report, they say that despite having their presence in EVs, they really haven't been able to gain as much market share as one would have thought in the electric vehicle segment. So the management indicated that there's a 200 basis point losses on the EV business, and the total EBITDA loss has come in at 200 crores because of the EV segment losses. Now, despite the discounts that Hero has offered, the market share in the EV segment is still just about 2 to 3 odd %. Goldman Sachs has a sell on the stock with a target price of 37.30. Morgan Stanley has an underweight with a target price of 36.38. They say that the elevated valuations keeps them underweight on the stock. Back to you.
Okay, thanks a lot for that, Sonia. Well, EV may be the way to go, and in fact, that could be a big, revenue growth potential. But in the near term, it could keep a hurdle on margins, and that's the reason why the stock is very disappointed. Deepan, how do you read this? The big growth driver is actually going to be a bit of a drag, and if they go for more economical launches, it's going to hurt them even further in the EV vertical. Your take?
Yeah, Dr. Nigel, yes, that is the problem with the entire two-wheeler industry, with the exception of perhaps Eicher Motors, which faces least threat from EVs. But all the other companies, Bajaj Auto, Hero MotoCorp and TVS Motors, are going to face the disruption of EVs, and all of them have their strategies. And who knows, they may be huge EV players as well. But end of the day, the margins in EV two-wheelers is much, much lower than the present two-wheelers which are sold by these companies. Return ratios also are lower. So you could have a situation where top line continues to grow and the EV proportion also continues to grow for these companies, but the bottom line remains static or starts to slide as well. So that really is a concern for these companies, and Street is pricing it.
All right. Deepan, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC TV 18. Anand Shah is now joining us. He's head of PMS and AIF Investments at ICICI Pru Asset Management Company. Anand, good afternoon. Good to have you with us here. Thanks very much for your time. Stocks have, especially in the PSU space, have had a one-way kind of a rally. And there has been so much hand-wringing about what's been going on. But momentum clearly is, sort of carried those stocks to absolutely very high levels and pullbacks now for the last 2 days or so. In the broader market also, we are seeing telltale signs of, some amount of profit booking. Is this the one, which gives us that, meaningful kind of a pullback? Or you think, like what we saw in January, we saw, a 2-week, 4.5% pullback, and that's it, the market turned around and made a new high. What's your sense, Anand?
Hi, very good afternoon. I think you already, sort of explained that we had a very sharp rally in pockets of the market, and that's been self-correcting. I'll take a little step back and say, look, these are interesting times in the markets where while we had a very solid run in the overall markets, broader markets are doing well. The good news is that the broader economy is also doing well. So if you look from 1st April 2021, the earnings per share of at an aggregate level, at the index level, would have gone up by almost 100%, 90 to 100%. The markets are up between 40 to 50%. The broad market I'm talking about. So to that extent, it's tricky. Look, if the markets had not rallied and the economy was doing well, it was an easy answer. And if the economy was not doing well and markets would have rallied, then it would also been an easy answer. But that's why, as I'm saying, from stock picking, being careful about the segments of the market, the sectors in the market in which you are, is very, very important. If you see even today's fall, or for that matter, last few days' fall, again, the large caps are not falling as rapidly as you're seeing some pockets of markets, be it mid caps, small caps, or even PSU. So I think it's part of this is liquidity, part of this is retail investors' euphoria. I think that's a little bit of pullback. Coming to, I think, to me personally, these pullbacks are very healthy. As I'm repeating that the overall economy is on the strong wicket. Obviously, we have global headwinds in China. We have global headwinds from US interest rate hike leading to slowdown in the Western world. The developed world is sort of slowed down, and we are hearing from many companies talking about slowdown having some impact. I think broadly the economy is doing well, and to that extent, such corrections are very healthy. To that extent that the markets don't become overrated. We are not talking of very expensive valuations from which an incrementally money making becomes difficult.
Anand, afternoon. This is Rima here. Did you have any PSU stocks, whether in railways or defense, in your portfolio, or even in the power sector? Most of these stocks have corrected. Will any of them make it to your buy list now, with the fall that we've seen over the last couple of days, or would you still wait it out? And what have you made of the earnings misses?
So again, broadly, we have ownership in select banks and select power companies. And to be very honest, we are not very disappointed with results. Yes, there is quarterly volatility in results. But when I see broadly over the last 2 years, generally banking as a system is doing very well. And within that, PSU banks have also not disappointed. To that extent, results is actually not the problem, if you ask me. Notwithstanding, there is always obviously a quarterly volatility. As I'm again repeating, I think one needs to be careful. There has been a sharp rally in select stocks, and many of them might not merit that sort of valuations, or many of them might not merit that sort of rally. And to that extent, there is this pullback is what we are seeing. But broadly, again, we've been fairly cautious. We've been also guiding. We've been also communicating that, on the back of such a sharp rally, one needs to be using more systematic investment route rather than doing a lot of lump sum investment in these markets.
Okay. By the way, not much is changing on the screen. The mid-cap index is still down 2%, reeling under losses. Just to talk about, the approach from here on, Anand, I mean, we were just talking to Bharat Forge right now, and it was a little strange because not always do you have an industrial company in that part of the market coming out and issuing almost like a profit warning, almost as that, sounding very cautious about their exports outlook for the next year. How are you looking at industrials and the whole capex-related stocks as a whole? And I mean, I'm not asking you for a stock comment, but just what do you think of a company like Bharat Forge sounding so cautious on its overseas markets?
No, I think we've been overweight both manufacturing and manufacturing-allied businesses. So, yeah, part of the sectors also been part of our buy list. To be very honest, it's not unique. We have seen quite a few companies across chemicals, across auto anchors, across industrials, who have complained about slowdown in US and Europe. Particularly, we've also been more often hearing nowadays the word called destocking, right? We were just discussing that, this many times we haven't heard destocking in our career, but that's another thing that post-COVID, so there was a shortage during COVID. The supply chains were tested. So when there was an opening of post-COVID, there was a very strong restocking cycle. And now post that strong restocking cycle, as the commodity prices went up, there is general inflation in the environment, which causes some slowdown in the demand. And then now as the supply chains have sort of settled down, we have seen across textiles, across auto anchors, across industrials, we have seen also across chemicals, especially in agri-chemicals, we have heard this word called destocking. So I think part slowdown is also because of US and Europe slowing down, but partly is also a destocking cycle, which will be more transitory.
All right. Hi, Anant. Good afternoon. Anant, I wanted to ask you about some of those winners. Trent, in one of your funds, I think you'll have a holding out there, and that was one of the results of this season. It's been one of the stocks of the last couple of years. How do you view some of these names? Results are coming, you all got in early, but at current reckoning, would you just hold on to the position? Would you consider even booking out in some of these stocks that have done very well for you all?
So consumer, again, we've been, to be very honest, within the overall B2C space, we have been underweight. But within that, we are looking at pockets where the Indian middle class is incrementally either spending, which is partly we have overweight positions in airlines or hotels, more to do with entertainment, because that's where incrementally we would be spending, but also the way we spend. And organized retail is another area where we've been overweight. So while on overall consumer space, we've been underweight, but there are pockets within the consumer that is growing faster than so overall consumption would not grow very rapidly. And to that extent, we are seeing a sort of disappointment in earnings across many consumer-facing businesses, FMCG and others. As you rightly said, Trend is an exception, but then we are seeing that the way the Indian middle class will consume, the way he or she will shop, is also changing, and that's where unorganized to organized in the entire retail space, be it grocery, be it quick commerce, be it food delivery, be it the apparels. I think we are seeing pockets of industry sectors and companies which have got the business model right. And that's very important because not all apparel companies could do well, as we have seen slowdown warnings across other apparel companies also. Trend has been, in that sense, some of an exception.
Okay, Anand, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC-TV18. Speak with you soon once again. Well, 130 points lower. It's not, selling off or anything more, but we are down 100 solid. 21,640 is where we're at. We'll take a quick commercial break here. We'll get you a check on dealing rooms. Nimesh joins in on D Street Chatter. We'll get you our top technical trading ideas as well with our experts in just a bit from now.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the Motilal Oswal studio. Well, the markets are under some pressure, so it's a good time to get in Nimesh. Nimesh, you know, that fund manager who you told me about around 10 days or so ago on this segment itself, that he's taking some money off the table from the PSUs. Wow, what brilliant timing.
Right?
What brilliant timing.
That is the timing, right? I mean, see, this is what it is. When the whole street gets greedy, you have to sell. And that's what exactly this fund has done. So hats off to the timing of that one particular fund who was actually selling the PSUs in the last 1 week. So,
indeed, if their prices
and that's
come...
showing up, and that's showing up in the fall, right? Today, all the PSUs are down. The indices are down 3-odd%. Individual stocks are down almost 10, 15 to 20% as well. I guess this quarter earnings was a bit of a reality check as well, right? We saw a lot of earnings over the weekend and all were disappointing. And we've seen in the prices as well, down 12, 15, 14%. But again, you know, this fall is not led by the larger institutions because not much institutions own it. It's largely the retail and HNI investors who were owning a lot of these PSUs, and now there is a bit of unwinding happening from that end. So, and that's putting pressure on the broader markets as well, because you know once you take a hit on say 5 out of your 10 portfolio stocks, and they are negative 10, 12, 15%, that has an negative impact on the other stocks as well. So that's also putting some pressure on the broader markets. That's the broad sense. From a flow perspective, it's not that bad is what I understand from a larger institutional activity. In fact, there is a bit of defensive buying now, both in IT as well as in pharma names. So that stands out from an institutional flow perspective. But I guess this pain in the PSU can actually a bit of a impact on the broader markets as well. So that's something we need to watch out for. From a technical point of view, I spoke about 21,690 as a big level to watch out. We're anyway trading below those levels. Now the next level to watch is 21,450 on the Nifty. If that gets taken out, then we'll see a big fall or a sharper correction in the days to come. So that's something to track. But interestingly, we have the MSCI rebalancing tomorrow. On the broader level, it will have an inflow of between $800 to $1 billion. But do remember, there are a lot of the PSU stocks which might get added to the MSCI, and that can have a bit of a reversal in the PSU stocks as well. So that's something to watch out for. I mean, often I can remember of Canara Bank as one of the big candidates which can come. So that's something to watch out for. So the MSCI inclusions could be a bit of a trigger for the PSUs to see a bit of a reversal. But broadly, the fall is not led by a very large FI selling. That's overall feedback.
Let's get to individual stocks. And Nimesh, what's on your radar?
Well, so in terms of individual names, the first stock is Zomato. That's been buzzing on very strong volumes today. Post the Q3 numbers, there is a bit of excitement in terms of buying as well. But now, watch out for a very large block in Zomato very soon. Remember, one of the strategic investors is likely to sell a large chunk. And the lockup is going to end very soon. So that's something to track in Zomato going forward. So that's the first name. The second stock is Godfrey Philippe. Out of the blue, that stock is up 8% in a weak market in today's trade, and that's largely backed by FI buying. Some bit of institutional interest is back in a stock like Godfrey Philippe. It's a low liquidity stock, so not large volumes do take place, but there is delivery-based buying in Godfrey today. The third name is Sun Pharma. I spoke about pharma as a package done well, but Sun Pharma stands out purely on back of very strong buy flow. So even at these high levels, there is a bit of institutional interest in Sun Pharma from larger institutions. And the last one is Zaggle. Post the earnings saw a big up move in that stock as well, but now some bit of selling pressure, largely on back of broader market underperformance, but there is selling pressure as well in Zaggle from larger FIs today.
Okay, Zaggle really dazzled, right? I mean, last couple of days, and there is a little bit of profit taking, as you said. Okay, interesting list. Zomato is doing well, but expect a large block soon. Godfrey Philippe, the Sun Pharma and Zaggle, which is under pressure. So, Nimesh, thanks very much for that. Well, let's get you some trading ideas as well, near term, very near term, how things are looking. So, Nagaraj Shetty is with us with that. Short, quick BTST trades, or BS, sell today and buy tomorrow, STBT. Nagaraj, what is it? What's on your mind?
Yeah, still I'm with STBT only because market is not showing any respite from the lower levels. Even mid-cap, broader market is like mid-cap and small caps are deepening their cuts and market at the lows. So I'm expecting this 21,500 holding on the support of 21,500 is little bit skeptical at this point of time, and move below this support of 21,500 could open more weakness for the market ahead. On that front, I'm continue with the selling ideas that I will discuss with in the noon, that is the PEL, Pyramid Enterprise, and the IDFC PL has declined a bit from 868 to 858 levels, 10 odd points, and I'm expecting some more decline in PL. One can look for a downside target of around 820 in the PL for the short term, at least next session, or maybe after that. And IDFC is looking weak, currently placed at the lower levels. That is currently at 113 at the discussed level, and I'm expecting this stock to come down to 107 with the same target in the near term.
Thank you very much for that. Gurmeet Chadda from Complete Circles is also with us on the show. Gurmeet, wanted to get your thoughts in on Park Hotels. The company which debuted on Dalal Street today, it had a gap up opening. It's built on that, and it's a 30% up move on Park Hotels. 202 versus the issue price of 155. Now, considering hospitality per se is doing well, we've seen a good run up in stocks like Indian Hotels, Lemon Tree, Chalet. Even now, Park Hotels, you're getting it for a valuation of about 35, 36 times forward multiple. And this is a company which consistently has been giving you occupancies of 90% plus. Have you looked at Park Hotels and any thoughts on it?
Yeah, thanks, Seema. So we haven't bought it. It's not part of our portfolio coverage, but we do have Lemon Tree and Indian Hotels. Lemon Tree, of course, has done pretty well. There's some moderation, obviously, after it hit 140 plus. After the Mumbai property came operational, almost 700 rooms added. And more importantly, they are likely to, they have a great pipeline for next 2 years. And more than 50% are management contracts, which makes it pretty asset light. So we're using these dips to add more into Lemon Tree. And if we get a little more than Indian Hotels, we'll look at that as well. We're also tracking SAM Hotels, but unfortunately, Park Hotel is not part of the.
Okay. By the way, there's again renewed selling pressure. The Nifty is again back down to falling almost 200 points, getting back to the lowest levels of the day. The slide on the bank Nifty is also now pretty much resumed, in the sense that we were slightly off the lowest levels and now we're back at the lows of the session. And the mid-cap index fall, by the way, is crunching. 2.7% shaved off on the mid-cap index. And look at the advanced decline ratio. Let's just pull up the lines. You've got less than 400 stocks moving higher and almost 2,000 stocks falling today. That's the extent of the mid-cap shakedown that we have seen. So big day. Gurmeet, hi, afternoon. Just comment on this. I mean, we do get these shakeups every once in a while. How severe do you think is this one? And I think the bigger question is, what do you do with your PSU stocks? Dump them now, take the money home, or use the dip to buy? I think that's serious confusion out there within retail today.
This is what market does, Surabhi. It just takes away, it goes up in stairs and comes down in an accelerator, right? And I think somewhat was due. A lot of the PSU banks, not banks particularly, but I understand few PSUs doing well in defense, like HAL, some of the railway names doing well. But even we saw, an Engineers India or a Hutco, etc., also going up, doubling up, just because the PSU thing was rallying up. And the rationale was given is that X has gone up, so I should catch up. I think once you get into that line of reasoning, you're very close to the top. I think and that's what it does. The correction will happen, 20-30% will just disappear in a matter of few trading sessions. And I think some rationality coming back. Nifty, by the way, is still 21,500, 600. So it's maybe down about 2-3%. But some rationality is needed. The way small mid caps were going up in most pockets, just because of sheer liquidity and FOMO, I think some correction was due. I think it's a beginning of this. Maybe a little bit more is due. I don't see a very large meltdown. I think and it's good, as I made this point earlier, leading up to a general election, if FIs are lighting their positions, positions are getting, the excesses are getting slightly rationalized. I think it's good news heading into a large event like general elections.
Let's talk about MCX. That's losing in trade on the back of its weak Q3 numbers. Sudarshan joins in with the fine print on the earnings. Sudarshan.
Yeah, that's correct. So MCX has today fallen more than 9% after reporting earnings that were below estimates. So company has reported loss of rupees 5 crore against profit of rupees 12 crore. On EBITDA front, there was an EBITDA loss of rupees 20 crore against estimate of rupees 22 crore EBITDA. Futures and options average daily turnover were up 12% quarter on quarter. But main tracking point for the company's earnings is software expenses. Q3 software expenses were at rupees 146 crore that were up 10% QOQ and 115% year-on-year. But company says Q3 was the last quarter of high software expenses. From next quarter, this amount is likely to be less than rupees 30 crore. MCX had earlier told CNBC-TV18 that for 1 year, there is no charge by TCS for software service. If you remember, in October 2023, company had shifted to TCS software platform.
All right, thanks very much for that. So that's essentially, some more clarity coming in on stocks. The market, by the way, down and out, nearly 200 points on the Nifty, but the broader market is where a bulk of the pain is. And I think completely agree with what Gurmeet said. Some sanity, some rationality coming back, and that election point. You've got to create some space for a pre-election rally, right? Otherwise, you go in. I mean, it's not. It was looking just too hot in a way. So there is that perhaps that space, etc., being created, and in many of these names, which was just sort of gains begetting gains, momentum for no real good reason. I mean, stocks are coming down very sharp. Actually, in some of these names, I mean, we are talking about 35-40% falls in 2 days flat. So in a way, undeserved gains getting given back very, very fast. We'll take a quick commercial break here. More market talk. Our next guest will be with us, and we'll be wrapping down the trade as well. Stay with us.
Welcome back. 154 down on the Nifty. We're almost counting down to the close. Gurmeet, just want to get your reaction to some of the other sort of major movers of the day. Hero Moto was one of them. There's been some talk about losses on the EV side of the portfolio. Any thoughts here?
No, I think there's not much value at current price. I think the two-wheeler numbers still soft. You probably have to wait for more to come in. We have the ancillary play, which we track, which is, let's say, Solar, which is largely serving two-wheelers more and now diversifying. Some through Minda, which has a 45-55 ratio. What we hold is TVS holding company and the ancillaries more. I think two-wheelers probably after the current run-up, not much is there.
Okay, no, got that. Gurmeet, in your portfolio, are you looking at something closely where prices have come off sharply, or you think not really? I mean, you're not really big investors in PSUs, and that's where bulk of the correction has happened. So that's I'm not asking you for your view on PSU or if you're buying anything there, but across the board.
Yeah, a couple of PSU names as well. We like Power Grid. I think we did not participate earlier. We think almost 3.5 lakh crore worth of transmission lines would be needed to create 500 gigawatts additional. So I think, and in the recent quarter, they had almost 62% share. So that's a big beneficiary. HL is on our radar. We actually exited a little early in HL, to be honest. I think after run up more. So I think that's another PSU, which I think is more structural. It's a solid play on air defense system as well. And we are adding some of the small mid-cap names where we've seen a good correction. One of the small names is Control Print, which is into coding and printing. It's a proxy play on manufacturing, which we are looking at. And some of the larger names like ITC, etc., where valuations are looking very, very reasonable now.
Just a quick word. What Bharat Forge had to say about the slowdown in exports, and they're guiding for, weakness even in FY25. Is there going to be a rub-off on any other auto ancillary company?
Selectively, yes. More on the commercial side, to be honest. But I don't see it has to be company specific. We've seen that, different companies report different set of numbers. Sona BMW had a very strong showing. Some of the others had limited showing. So you need to, map the value chain. So if you're, let's say, bullish on SUV and that premiumization playing out, and let's playing more content per vehicle. So a Sona BMW or a KPIT, which is again a proxy play on more software and more case per car, and Tata Motors, let's say an M&M, I think. So you have to map the value chain. We are just right now trying to play passenger vehicles, and within passenger vehicles, the SUV and the premiumization trend more. And there, I don't think so there'll be much rub-off.
Gurmeet, thank you very much for joining in. There was a big meltdown seen in the mid-caps today. The mid-cap index ends with a cut of about 2.5%. The Nifty ending just above 21,600, but a steep 165-point cut. Sensex lower by 500 points. Banks and PSU were the two spaces where we saw intense selling pressure.
Oh, yeah, absolutely. It was a day marked by intense selling on the mid-cap side and the PSU side. On the large-cap screen, the added problem was the selling in banking stocks. The Bank Nifty is ending with a cut of 750 points. And it's, trying very hard to have a close above the 200 daily moving average. But it's broken a lot of critical levels today, the Nifty Bank, that is. If we talk about the major losers, even PSUs here on the large cap screen, Coal India, BPCL, ONGC, NTPC, SBI, just a bad day for PSUs. On the green side, we have Pharma. That was literally the sector of the day, trying to, fight back. Dr. Reddy's, Divi's, up and about, and maybe some buying on IT stocks like Wipro and HCL Tech. But otherwise, Prashant, weak day for sure.
A weak day, and I think, under the 20-day, which is a simple kind of average to look at, there is the next kind of target, or whatever you want to call it, supports perhaps only come in at about 21,450, which is the 40-day exponential average. And we'll see if the market wants to go there, or it's going to be more choppiness, etc. But PSU is clearly seeing the bulk of the hit, 4-5% cuts across PSU indices, and there are a few. Well, that's it here on this edition of Closing Bell. From all of us here, goodbye. Thanks very much for watching. Markets Forward will pick up on all the action in just a bit from now.